Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily stock market analysis show, where we analyze what happened in the market during the day and then try to learn something from it and better plan for the next day. So here we have another bearish day and a volatile day as well. Let's quickly get in the charts and see what happened. Look at this candle. What is this? It's a gravestone doji. It's bearish in nature. It is indecisive as well. And the wick size indicates the selling pressure from the top. Okay, try to move up. It's not. It's just push downside. That's what exactly that you see on the Nifty. Let's look at the Banknifty charts. What do they say? It's also just it's a gap down in Nifty and gap down in Banknifty also. It's clear bearish for the slip. 1.56, nearly 600 points lost in the Banknifty. 150 nearby points lost in Nifty. So that's less than 1% and 1.5% kind of move is what happened today. Different selling pressure and yeah, so those are the bearish days. The bearish days are here for sure. And it is bloody volatile as well, right? It's very difficult to trade in this 22 weeks levels, especially if it is derivatives and options. It's tough to catch and do the adjustments and all that. So that's what it is. Intraday, it's very interesting. If you see, if you use the 5 minutes charts, you can see that the market gap down. This is a Nifty that we are seeing. Morning it gap down, then made a V-shaped move of full recovery, then again lost and gave up everything. Right, finally losing near to 1% of loss. So it's a V and another V. Right, V-shaped moves is what you see. Banknifty also it's volatile, gap down, then attempting to move up again, push down, again put down. So here it is like 1, 2, 3, 4 V's, and finally it breaks down and loses even more. That's what you see. So there is a double top pattern that is in the Nifty, which could lead it to take it even further down. If you take the daily charts, you can clearly see that this M pattern. Neckline for that was around 161 kind of place, and then that's lost, and then it can further fall down as if the double top pattern is going to work out, right? As much of the height of the pattern would be the fall, so that is furthermore to go down. How much more? Yeah, 1800 to 700. Yeah, so it can go much further to 16,000 at least. That's where we are. We lost all the moving support, moving average and exponential moving average, 20, 50, 100, 200 all gone. And Banknifty now just has 100 and 200 EMA, daily moving average exponential. So that is also please Banknifty also loses it today. It has taken that support actually. Let's quickly look at the support resistance levels. It's very crucial. Upside support, the resistance would be 17,161, which is the previous support, and previous swing high it is 17,290 to see the gap support. That's there further above that. That's for tomorrow's support levels that we're talking. 16,650 and the 16,750, that zone downside. One of these 16,650 is a gap support, another one is a previous swing low. That's a support zone, and after that you have 16,360, which is like support zone. That's a gap. So all those gap ups that we have done in the in the big 20% kind of moves that we did earlier, that is all acting as supports and then breaching going down. Banknifty 39,413 is a resistance on the upside, and 39,749 resistance on the upside. One is a gap, another one is the previous swing high. Support zone side 37,250 is the support, previous swing low, and then 36,808 near to 37. That is a gap. That is support resistance for the Nifty and the Banknifty that you see. Bollinger Bands are clearly showing expansion now on the Banknifty as well, downside. If you just see the Bollinger Bands, there is no doubt that there is an expansion in downfall. And today it confirmed that bearishness on the Bollinger Bands on the Banknifty as well. Momentum is fallen yesterday itself in the bearish zones, and then below 40 is what it is going. Bear zone short term trend, bear zones with strength increasing. Then we're talking about ADX, trend indicators, trend, momentum, volatility, price patterns all going against. India VIX spiked up today further, 22. So It's far from trading, extremely cautious, very difficult to play. Option selling kind of strategies and adjustments on spirit of unless you're an expert, stand for it. Futures saw a short build up, it is long build up yesterday on Nifty. So it's now short build up today. That has happened on both indices. 16,500 and 17,000. Just one day before the monthly expiry of September. It's a clear range that that's a 500 point range that's going to happen in play. So probably 16,500 may hold is what right. So 17,000 is history. That's where the highest resistance calls are written, and 16,500 is where the supports and see. Making note of this because options higher levels are more relevant closer to the expiry. So it's a monthly expiry, it's very much relevant. And if it's 36,000 and 40,000, so it's expected, the option writers are seeing more volatility there. It's a 4,000 point range. This is for September 29 monthly expiry, that is tomorrow. Right. Put call ratio is also absolutely not bullish, 0.61 and 0.53. It's more closer to the bearish zones, actually bearish. So options data is also clearly indicating that there is short or bearish bias is there for the market. Now looking at the sectors that performed today, metal, FMCG, realty, all of these underperformed today. Farmers only think that less than 1% of performance happened, and others are flat. Other major sectors we're talking about. Metal, auto, realty, all these three stocks, three major sectors are in bearish zones on the short term. Rest all somehow maintained, including IT, which was in the bear zones, now climb back to the sideways. So sideways momentum is maintained by others, but these three stay out of that in the short term. Heavyweights, HDFC and Reliance fell 2 to 2.5% nearly today. Others are all flat. The thing is, all the heavyweights are in the bear zones. None of them are in the, from the momentum perspective in the short term, daily charts. Fair data for today has not come. Definitely selling has happened from the Fyers week. It has not come in, right? So it's how many days now? 6 days of selling is what you see, 6 to 7 days of continuous selling, and the last 5 to 6 days of selling is minimum about 2,500, right? And on 26 September it's 5,000 crores of selling. So the FI is pulling all the money from the Indian market is a concern, but he has been supporting yesterday. We don't know today's data, let us check. Let crude oil is playing with only relief that we have, it's below 79, but some spiking is there because it's at this breach the support zone and then taking the next support and going to try and consolidate. So that's only relief that we have. Dollar is as of now it's falling in flat, but it's having bullish momentum. But today it's back 114.6 is where the 20-year high plus all-time multi-year high is where we are. It's going like a rocket. USD INR, the currency pair, is very bearish in the sense that it is dollar index shooting up, and even the rupee is at a biggest level. It's very close to 82. In fact, I think it hit 82 today. So Huawei is not doing any intervention. It's not possible. It's a global macroeconomics that is playing out in the fundamentals language as they speak. But yeah, it's a big concern. Right? The dollar is shooting up, and rupee is becoming weaker. It's a concern. It's a major concern. If I is selling the price, the charts are saying, the data is saying, the FIS are saying, the dollar is saying, global markets, mother market itself is saying it's heavy bearishness. So we don't have to talk too much. It's very much evident. The only thing that we can do is to look at support resistance levels and then play the game, or stay out of it until the VIX cools down. Coal is also falling. It is breaches support zone and falling down. SGX is as of now red. US index is also red. So it's like 21% plus kind of fall has already. Correction has happened from the top. Momentum is clearly bearish for the US indices, Dow Jones, S&P 500, Nasdaq, all are breaking down. So it's a 52-week high, pre-COVID high. All these are breached, and you have to be cautious. If big movements are happening there, just can't be decoupled for long, right? Before money will flow out. That's what is happening. Major event tomorrow is monthly expiry. Volatility is expected. RBI event is there Friday. Volatility is expected. Right? So be cautious if you're in the game. Stock X. Actually, it's not intellect design. I had made a posting of Godrej Properties. I forgot to mention that here. So Godrej Properties is a short possibility is there. Let's just quickly see the charts. What do they say? So this is what it is. So the bearishness is evident on the weekly, but entry has to be made on the long time frame. So it's head and shoulder breakdown. Breakdown more or less is confirmed. You just have to wait a little more for the week to end, and then you can trade. Swing opportunities on the downside. It's not for tomorrow. These are picks for the coming few days for swing opportunities in the trade. Head and shoulder pattern with trend line and resistance both in the peer zones, even medium term as well as the daily time frames. Now the second pick is Oracle Financials. That is also having a similar pattern. Bearish head and shoulder, very much evident. It's in the client's not breach. If it is breached, you can take the call because bearishness indication is what the momentum and the trend indicators are showing, and then price pattern definitely it's a bearish one on the downside. Targets can go as long as the height of this head as 2850 minus. It can be big downfall if it is breaching down, but there are supports in between. So you can give short swing trades. Target for that one. Keep or you can trail. If the big falls are happening, but don't touch it for big. As per the pattern size, but at least you can trail it after 1:5 or 1:2 risk-reward. Trail it from there. That's all you have to do, right? Just a wrap up for the view of September 29th, Thursday expiry day, monthly expiry day, tomorrow 2022. My view is bearish. That's what the charts are saying, that's what data is saying, that's what global cues are giving. So now it's just 7 to 10% of correction is happening now market. Right, and it was very volatile in the last few days. It may continue to be there till Friday at least. And it's weak, market is weak, fragile, like I put the thumbnail yesterday. It is fragile with volatility. Its market is fragile and volatility is haunting it. It's the same thing that's happened today also. Price patterns, momentum, trend, PCR, VIX, FII data, they're all in favor of bears. So market view remains bearish. US market is breaching major pre-COVID level highs. Rupee is the weakest level, $82 rocketing to 114 plus. Extremely cautious. Stay out of the markets if you're derivatives or option trader, unless you're very expert in playing that. Right? Option buyings may work because of the Vega effect. And protect your quantities investments for long term with options trading strategies. Right, like covered calls and all that, and get into SIP mode of investment using secure cash secured puts and strategies like that. If you're not watched that, check the playlist, we have videos on that as well. So monthly expiry is there tomorrow. There might be volatility. RBI event is there Friday as well. So levels, keep watching these levels and then put tight stops if you're in the game. Right, time decay benefits would be there on monthly expiry, but it's very dangerous play when the VIX is greater than 22. Okay, so if it cools off, that's the time when you have to get back to the game if you're into options trading, in index options, stock options, whatever it is. Right. Hope this helps you in some way to get a view and get a trade plan for the next week. If it helped you in some way, please subscribe if you're not subscribed. Share it to maximum. I appreciate your help because it keeps us motivated to keep doing this every day. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.